Good evening everybody and welcome back to episode 181 of Enter Crypto, where twice a day I keep you informed and fully up to date on all things crypto. If that sounds like something you'd be interested in, then go ahead and like, subscribe, and don't forget to click on the notifications bell to receive all future updates, as I put out a new video every 12 hours. So today we're going to be talking about an article from the Wall Street Journal, or WSJ, and it's titled "Crypto Companies Behind Tether Used Falsified Documents and Shell Companies to Get Bank Accounts. Tether Holdings and related crypto broker obscured identities, documents show." So in this evening's news, it's been revealed that crypto companies behind the popular digital currency Tether have been using falsified documents and shell companies to obtain bank accounts. Tether Holdings, the company that operates Tether and its related crypto broker, have been accused of obscuring identities and engaging in deceptive practices. These revelations have come out as part of an investigation into Tether's operations, which have been under scrutiny for some time. Tether is a so-called stablecoin. This is one that's actually backed and not algorithmic, as we've talked about in previous episodes on this channel, which basically means that it's a digital currency that is supposed to be pegged to the US dollar. It is widely used in the cryptocurrency world as a way to move funds between exchanges without having to convert to traditional currency. So it's basically a way for traders to move in and out of trades, or for people to preserve the wealth in US dollars without actually having to touch the traditional finance system or the legacy financial world. And we can still stay in the world of crypto because Tether is actually an ERC20 token on the Ethereum network, and it actually operates on other protocols as well, like I think Polkadot, BNB, and a couple of others, Cardano as well, I think. So according to documents obtained by investigators, Tether and its related companies have used shell companies to hide their true identities when applying for bank accounts. They also submitted falsified documents in order to meet the banking requirements. The investigation found that Tether's bank accounts were held in countries with lax financial regulations, raising concerns about the company's financial stability. Critics like myself of Tether have long argued that the company does not have enough dollars to back up the Tethers in circulation, meaning that they don't hold enough assets on their balance sheet for the amount of USDT or Tether that they are issuing and that's circulating within the crypto community. There is a discrepancy there. That's what many people believe. Not many people have been able to prove it, but we'll see about that. And that it's basically been artificially inflating the value of Bitcoin and other cryptocurrencies. So if you imagine that you've got all this liquidity sloshing around, all this extra money, then people are using it to buy Bitcoin, and this is giving Bitcoin an artificial price that's higher than what its real value is, which is obviously not good. Because it actually leaves exposure that if something like this happens, or if Tether goes under, then Bitcoin is going to drop dramatically in price because those dollars no longer exist, because it's all been part of a scam. So that's the danger here. Tether has denied these allegations, but the recent revelations about its deceptive practices are likely to increase scrutiny of the company. And let's remember that the use of shell companies and falsified documents to obtain bank accounts is not unique to Tether, and it's not unique to crypto, but it is a worrying trend in the cryptocurrency industry, because we want to be showing everybody that we're not criminals, that we just value our privacy and we want freedom, and we don't want the fiat system, the pound, the yen, the euro, the government issued currencies. We don't want them. We're sick of being sick of that corrupt world. We want to go to a standard where money is hard and where money is real, and we're not inflating it away and printing more of it every year that goes by, and devaluing our labour, devaluing our property, devaluing basically every asset out there. So we don't want that. Also the lack of regulation and oversight in this sector makes it easier for companies to engage in practices like this, and it puts investors at risk, and that's what we saw with Tether as well. excuse me, not Tether, FTX as well. They were able to get away with it for as long as they were because of the lack of regulation. So as this investigation into Tether's operation continues, I think regulators and investors alike will be watching closely to see what action is taken. And in the meantime, the revelations are basically a reminder of the need for greater transparency and accountability in the crypto industry, especially when it comes to stable coins and USD pegged coins. But you know, even with this, if it's true, of course Tether is still denying it, but if it's true, I would still think that this is a healthy correction if it does come out, because Tether are basically, if this comes out to be true and they lose their value and Bitcoin goes down and all this, this is just another market correction. Of course people are going to lose money, I understand that and I sympathise, but you know, markets do not and should not just go up all the time over periods of time. They go up and they go down. It's just a normal market cycle. You know, we don't need, just because of this now, more government intervention in the industry. We don't want to, you know, so much so that it stifles innovation and entrepreneurship. We want the market to be left as much as possible to regulate itself. You know, that's the aim here. So, but you know, as an investor, it's your responsibility to do your own due diligence, and that's why we always say in crypto to do your own research. Don't rely on influencers. That includes me. Don't rely on YouTube, you know, talking heads. Do your own research. Do the maths. Work out what you can afford. Work out your own risk tolerance. And what you feel comfortable with investing and how much money you feel comfortable investing, based on how much you would be willing to potentially lose. Because if you're, as we've said before, staying up at night and you're worried about how much money you've invested in something, then you've invested too much. You know, you need to lower that amount so that you're no longer worried about it. It's not worth it. If it's not fun, it's not worth it. So there are risks involved in investing in crypto, but there are risks involving in stocks, in you know, any sort of investment. There's always a risk. Even gold, there's a risk, because there's a risk it can go down in price. There's a highly unlikely risk it go to zero, because gold is gold, but it could go down. So bear that in mind. Now that's what I've got for you this evening, guys. Thank you as always for watching and listening. Remember everybody to please subscribe to the channel, join my team, and I'll keep you updated on all things crypto every 12 hours. Don't forget to smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.